an impact coming in here, but we have an IPO that's coming up as well. Fractal Analytics, India's first pure play enterprise AI company, 2,833 crores of IPO, which they're looking to raise, will open up on February 9th. It will be a combination of fresh issue as well as OFS. In fact, Rima caught up with the top management of Fractal Analytics and began by asking about the Anthropic new AI tool and how it could impact their business model as well. Listen it.
There are many companies that will come in that will leverage the power of AI to solve specific problems in a more effective way and therefore build out a great business of theirs. So Anthropic is doing in a few areas, Fractal is doing in a few areas, and other companies will do it in other areas as well.
But they have multi-billion-dollar R&D companies. So today they're doing it in a few areas. Tomorrow it'll be in all the areas, including the spaces that you operate in, like Vedya for healthcare. Isn't there going to be a market share erosion risk or risk of pricing?
Across the world, they will see this is such an evolving space and such a large space. There'll be multiple players, multiple winners doing multiple things. And so Fractal's focus is enterprise AI, which is the hardest part of AI, is translating enterprise AI excitement into enterprise performance. The biggest companies in the world that have complex software structures and databases and so on, and hundreds of thousands of users driving decisions inside companies using AI. That is a space that is currently not yet taken off in a very significant way. So that was also, in that terms, there are very few companies in the world that understand it. Even Anthropic and OpenAI, etc., don't have a full understanding of how enterprises really work because they have not solved those kinds of problems. So Fractal is well placed.
So no risk of disintermediation, no risk to the business model field.
We are the disintermediating or disruptive force that's saying that your existing technology stacks don't do a good job. Use AI to power decisions directly using these models. So we feel we are the disruptive force right now.
Has anything that Anthropic's Claude released which directly competes in the space you're operating in, any of the 11 plugins?
Not today, but we do use Anthropic, OpenAI, and our own reasoning models in order to drive this. And so therefore it is a way in which we get better.
Okay, let's get back to business then and numbers. Now your FY23 to FY25 revenue growth was about 18%. Now, considering you positioned yourself as an AI leader, you're an AI company, shouldn't growth have been higher?
Our growth, yes, it can be higher. And we expect, see, the big change that I'm saying is that consumer adoption of AI has been phenomenal, right? For example, ChatGPT, 800 million weekly active users. It's been one of the fastest adopted technologies ever in the history of business. When it comes to enterprise, this hasn't been the case because of a very good reason, that AI excitement does not automatically translate into enterprise performance. Like I said, enterprise systems are very complex. They have thousands, hundreds of thousands of databases and the data sources, and a lot of that is structured data. So most of the AI progress has happened on unstructured data, which is video, voice, and text. When you bring it to structured data, things that can be in rows and columns and spreadsheets and so on, that's where you don't see enough AI progress. So what Fractal is doing is bringing that AI and going into enterprises and driving that adoption. As enterprise AI adoption takes off, which will happen in the next 2 to 3 years, we expect accelerated revenue growth.
So FY25 growth rate was 25%. I mean, can you, in the next 2 to 3 years, keep at this 25, 30% kind of revenue run rate?
Look, we'll be disappointed if you don't grow that fast. Okay. That is the opportunity is huge. We have to obviously execute, but the opportunity in the AI space is mind-bogglingly large.
FY25 margins were about 17.5%. In the first half of the year, adjusted margins were 15%.
Yeah.
What are the steady state normal margins for a company like yours?
Yeah, if you again look at our historical performance, margins have improved considerably over FY24 versus FY25 was significantly higher. And again, if you look at the first half of the year, it was 15% versus 15.9%. So there's always a little bit of seasonality between first half and second half of the year, as you can see, versus the last year.
So what are the steady state normal margins for a company like yours? What is the long-term aspiration on margin?
Yeah, see, our gross margins are in the 46% range. And Cogentic, which is our enterprise agentic AI platform, there the margins are significantly higher. So as Cogentic becomes an increasing share of our overall revenue, our margins will trend upwards. Even in the rest of Fractal services, we see that our margins are actually trending upwards. So we expect margins to go up, and you'll be happy if it is in the 50+ range. And the gross margins are in that range. That's where we're taking it.
So margins should trend up, and the key driver for that will be increasing contribution from your agentic AI platform, Cogentic. And that will drive gross margins from the current 45% to 50% plus. So let's talk about Fractal Alpha, which is your incubation platform. While it's growing very fast at the top line, it's still making losses. What is the internal target for turning it around? When does it EBITDA break even?
So it's already improved significantly in terms of profitability. We're already seeing some of the elements of Alpha businesses starting to break even. So we expect that to happen in the very near future.
Next 1 year?
Next 1 year.
Technology obsolescence, that is a real risk for you, right? How much do you spend on R&D and how does it compare with global peers?
So we spent 6.1% of revenue on R&D for the last 6 months, for 6 months of this fiscal year, and we expect it to be higher. Now, typically, product companies, the best product companies in the world, spend about 14% of revenue on R&D. Services companies spend 0% of revenue on R&D, 0 to 0.5% of revenue on R&D. We are at about 6, going to 7, and potentially higher. We will expect it to be going up, not just on its own, but also as a fraction of our revenue. It'll go up. And this is important. We want to be the most innovative AI company out of India, and we want to make sure that our R&D spends are reflective of that.
Let's talk about valuations. Market capitalization is 15,500 crore. Your adjusted profit for the first half of the year is 143 crore, which means if I annualize it, I'm getting a PE of close to 50 times, even accounting for the dilution on account of the fresh issue, or price to sales of 4.8 times. Who have you modeled the valuation on?
We haven't modeled the valuation on any one company. I mean, there are a bunch of companies out there that one can look at. Palantir is a great example, who is trading at phenomenal revenue to market cap ratio, more than 100 times forward revenue of. So we expect that some of that kind of transformation we can show at Fractal as well. Fractal today is, for example, Palantir did an amazing job of growing their revenue significantly without increasing their headcount over the last 2 to 3 years. We expect to,
So that's
follow.
the company you emulate globally, Palantir?
Yes, Palantir is a company that we do think of highly, very highly.
All right, that's the word coming in from Fractal Analytics. The IT space continues to be in focus, a big downtick in the entire space. Time for a break now. On the other side, we'll focus on the F&O action with Mangalam after this short break.